Good morning, good afternoon, good evening, everyone, depending on which part of the globe you are at. This is the CBDC broadcast number 28. Today we're going to have retail CBDC adoption, consumers, merchants, and intermediaries. We're going to start in 1 minute or less. We're going to give the attendees to the opportunity to get comfortable. So let's wait a couple of seconds, please. In the meantime, as usual, we have a structure for the CBDC broadcast in which we're going to have the introduction and housekeeping by myself. That's going to take us a couple of minutes. Afterwards, we're going to have the main session. Today, we're going to have Tayo Koonprasert and Natsuki Tsuda. And at the end of the broadcast, like more or less the last 10 to 15 minutes, we're going to have the Q&As. And please remember to submit your Q&As through the widget that it's available in WebEx. We can go to the next slide. We can start already. So once again, welcome everyone. Today we're going to have a very interesting conversation with Natsuki Tsuda, who is Director of National Treasury Division at the Ministry of Finance of Japan. He brings a wealth of expertise in international finance and public sector innovation that will be very interesting to the topic that we're going to discuss today. And we also have Tayo Koonprasert, who is financial sector expert at the IMF and who I had the pleasure to meet last week in DC meetings, IMF and World Bank meetings. Tayo is a financial sector expert at the IMF with a specialization in central bank digital currencies. Both co-authored an article published by the IMF, which is a very interesting article in which adoption is the main focus. And as you may know, at FNA, we have worked also on modeling the adoption. So it's a very nice opportunity for us to exchange different views. Well, not different, because at the end we have very similar views, but different angles to the same view, because that always gives us more information about what we're going with the CBDCs. So once again, welcome everyone. Welcome Natsuki, and welcome Tayo. We're really glad that you're here. So thank you very much for joining.
Thank you, Carlos.
Thank you, Carlos.
Okay, the first thing that I would like to do, and especially because you belong to the Ministry of Finance and to the IMF, is if you can give a very brief presentation of yourselves, and you can take the opportunity to give your disclaimers, the usual disclaimers of central banks, Ministry of Finance, IMF, and so on and so forth. So if you want to start with that very brief presentation and disclaimers, this is the best time.
Yeah, let me go first. So thank you very much for this opportunity. And I'm excited to share a bit about my journey in the CBDC space and perhaps some key insights that I hope will be useful to Japan's approach to CBDC exploration. So to begin with, my involvement with CBDC initiative began about 3 years ago when I joined the fund. And during the time, I and my colleagues, including Tayo, provided technical assistance to several countries, each of which was exploring unique aspects of the CBDC tailored to its specific needs. So these experiences allowed us to draw lessons from a range of contexts, which we recently documented, as Carlos said, in a series of documents we call CBDC Virtual Handbook chapters, including today's topic, CBDC adoption. Now, in my current role after the fund, with the Japanese Ministry of Finance, I'm leading policy coordination among other ministries while working closely with the Bank of Japan, which leads on the technological and operational dimensions of the CBDC developments. This partnership resembles the division of responsibility we see in the regions like the EU or the UK, where central banks and the government collaborate closely to guide CBDC projects from a technical and a policy perspective. Perhaps I should say about the disclaimer. So while my views are shaped by my past experiences at the fund and my current role within the Japanese government. The perspectives I will share today are entirely my own and don't represent either institutions. Let me stop. Thanks.
Great, Tayo.
Great. Thanks, Carlos. It was wonderful to see you last week here in Washington, D.C. at the annual meetings. And thanks so much for inviting Natsuki and I to be part of the FNA CBDC broadcast, which, I always tune into. So very excited and very happy to now be on the other side of the broadcast. So my name is Tayo Koonprasert. I've been with the International Monetary Fund, the IMF, for about a little less than 2 years now. I'm part of the Monetary and Capital Markets Department here, where our team works mostly on payments and currencies. So we work on traditional payments, FMIs, and we also work on new forms of payments and digital money as well, including looking at CBDC, looking at stable coins, looking into tokenization, and also covering broadly cross-border payments too. So we work on a whole bunch of stuff, like I said, and as part of our efforts, we have this CBDC virtual handbook, which I'm sure most of you have heard of by now. As part of this handbook, Natsuki and I wrote this, fintech note on CBDC adoption, which we're happy to talk more about today. So that's a brief introduction from my part. And typical disclaimer: anything I say today here will be, my own views and doesn't necessarily represent, the views of my employer, the IMF. So thank you.
That's great. Thank you both of you for that presentation and the disclaimer. I work at the Central Bank of Colombia for 16 years, and I still remember how important is this part of the presentation. So let's start. As I mentioned, the focus of our discussion today is adoption, and retail CBDC adoption is something that has been like in the news. Academic and scientific articles for the last years, and I think it's a very interesting topic because at the end, what you want with a new form of technology in this discussion, a new form of money and payment instrument, is adoption, and it depends on many things. There are many moving parts, and I think that you have made a great job by discussing how the consumers, merchants, and the intermediaries do that. So that's the whole focus of what we're going to discuss today. Obviously, we're going to extend to some other subjects, but I think that the title of today's broadcast says a lot of what we're going to be discussing. So you already shared about your involvement in the retail CBDC initiative, so I think that we can start with the questions. So first, Natsuki, I would like to hear about your thoughts regarding the insights and the findings that you found resonating or important in the research that you did, and how did you see them influencing Japan's approach to CBDC implementation and adoption?
Okay, thanks. Sorry, perhaps could you repeat the question again? Sorry.
No problem. It's how do you see that the findings and the insights that you have that you wrote in the article influence Japan's approach to CBDC adoption?
Right. Thanks. So there are many insights we have collected, but first of all, perhaps I should begin with that. Although I have visited and provided technical assistance to several countries, no country has the same pain points, and no country have same payment landscape, and every country has a different policy objective as well as a different payment landscape. So you need to think about specific needs and specific cases for each jurisdictions. So that's the reason the policymaker should have guiding principles or guiding framework, and then we gravitated to think about what is necessary conditions for the CBDC adoption, and we documented it in the CBDC handbook. So we pay attention, pay close attention to the stakeholders, because the CBDC is not about consumers and merchants, but assuming the two-tier model architecture in the CBDC, one very important stakeholder would be the intermediaries to bridge the distribution from central bank to the end users. And then there are many ways to incentivize or incentivize the adoptions, or help the end users to pick up the CBDC with its improved capacity. So this is a kind of broad insight I could get from my past experience.
Tayo, same question for you. From your perspective at the IMF, what do you think are the key implications of your findings for global CBDC strategies?
Yeah, sure. Thanks for the question, Carlos. Maybe just to give like a quick background of what exactly it is that we do here at the IMF, it would put some perspective to my answer. So obviously at the IMF, we're an international organization. We're not a central bank, we're not a solution provider, we're not a consultant. Our work is very much oriented towards providing policy guidance for our member countries. And this is because, we've seen that globally policymakers have been searching for solutions to improve payment efficiency, inclusion and safety, and CBDC has emerged in the last few years as being one of these new and fancy solutions. And so we think that CBDC does offer a lot of benefits, but some countries might be at the risk of moving too fast with CBDC, or getting too caught up and thinking only about how to be technically, or thinking about technical or operational readiness when it comes to CBDC, and they forget to think about what are the broader macro financial implications of CBDC, and what are the risks that could come with it. We also have seen that some countries might run the risk of launching CBDC too early without considering how it'll fit into their payment landscape. So then CBDC becomes like a solution, right, in search of a problem. And so this is where IMF comes in. Our goal, especially with this adoption paper that we put out, and also with the broader CBDC handbook that we're writing, it's really just to help guide policymakers, central banks, on how they should be thinking about CBDC implementation from a very holistic perspective. We want to encourage them to think about what policy objectives they might want to achieve with CBDC, whether CBDC is actually the right instrument to do that, and if so, what players, as Natsuki mentioned, what sort of intermediaries need to be involved, what design choices they should be considering, how they should be reaching out to the different players and actors and users, what sort of incentives they need to be thinking about. So at the end of the day, our work is really to help nudge policymakers in this direction, and just to really encourage them to think from a more holistic and comprehensive perspective. So that's what I can share.
That's great. And I think that's a very valuable point, because at the end, no country has experience, or no country can look at the experience of others about how to do, or how to design and how to deploy a retail CBDC, because there is not a lot of information out there. So having someone or good references about what are like perhaps the best practices, or the best way of doing it, or what to consider at the end, I think that's a valuable contribution to policy making at the end. So for the second question, and as I already mentioned before, this is something that we find very interesting at FNA, which is adoption. I mean, like what drives adoption, and in that sense, it's also what agents drive adoption. So the next question, and this is something that I would like you to both to answer, is or to address, is can you give us like some insights about how the three different agents that are in the retail payment ecosystem, namely the consumers, the merchants, and the intermediaries, will determine the retail CBDC adoption? In your research, Could you share your thoughts on how the adoption depends on these three and which strategies could be implemented for the adoption?
Sure, sure. So maybe I can take a stab at this first. So you mentioned three agents, consumers, merchants, and intermediaries. So I think when we talk about end users, this actually refers to both consumers and merchants. And so maybe I can talk about them first, and Natsuki, maybe you can talk about the intermediaries later on. But I think, you know, CBDC, as with most retail payment instruments, it really faces what you call a classic chicken and egg problem in the adoption of CBDC by users, because consumers, you know, or adoption of CBDC by consumers, it will depend on how widely that CBDC is accepted by merchants, right? And then the adoption of CBDC by merchants will depend on how widely it's being used by consumers. So this sort of dynamic, it really calls for, you know, a need to create like a carefully balanced set of incentives to ensure that both consumers and merchants are motivated to participate in this market. But for some countries, it might be difficult to scale both sides of the market at the same time. In such cases, you know, it might be better for policymakers to target one side of the market first, such as the consumer side. Mm-hmm. And so from our research, we've seen that Sweden, they did this with their payment system, which is called Swish. They first rolled out peer-to-peer payments only to target consumers, so that, you know, consumers could send money to each other using only a cell phone number, and they launched that with 0 user fees. Before, I think, you know, Swedes had to rely on bank transfers, and they had to know the payee's account number, the routing number. And so this was sort of a new way of sending money to a peer. And once the consumers started using it more and more, they began to add more use cases that were targeted towards the merchant side, such as e-commerce functions and QR codes. And, you know, now today it's become a service that's very widely used in Sweden. So that's one example of, you know, a strategy of how policymakers can think about targeting end users. But at the end of the day, I think, you know, whether you're targeting consumers or merchants or both, really, you have to remember that CBDC is a product. And because it's a product, it really needs to be designed with user needs in mind. So one of the things that we strongly advocate for in our paper is the importance of doing user engagement. And what we mean is, you know, you really have to, central banks, they really have to try to understand consumers and merchants' behavioral choices, their habits, their social, their cultural factors around using money or using financial services. And we've seen a lot of central banks try to do this by doing user engagement surveys on CBDC, but we think that the questions that they're asking are still not really the right ones. So for example, you know, some central banks, they tend to ask about, you know, what is your willingness to use a CBDC? Will you use it when it's launched? Or what design features do you want to see in a CBDC? But this approach, we don't think it really yields reliable responses, because users really don't understand CBDC that well to make that decision, you know. So I think this could lead policymakers jumping to conclusions that don't really reflect users' behaviors and needs. And so in this sense, we think the most important aspect of really targeting users is to educate them, you know, to let them know what are the benefits of using CBDC are, how it's similar, how it's different to existing payment products already in the country, how they should use it, where they could use it. And so user engagement and education is really something that needs to start early on, and habits will take time to change, but it really is a key part of adoption.
Carlos, you are muted.
Sorry, thank you. Tayo, thank you very much for that. Natsuki.
Yeah, let me join. So unlike the physical cash, the CBDC requires intermediary to distribute and accept the CBDC in a user side and also merchant side. So the intermediary is bridging the gap between the central bank and these end users. And there are generally two types of the intermediary we are talking about. And one is the consumer-facing intermediary, and these entities provide customer support, including onboarding for CBDC, and they can range from traditional financial institutions like commercial banks and the credit unions to non-bank financial entities, including fintech company, big tech firms, and even mobile network operators or e-money providers. And then in certain jurisdictions, maybe government agencies or national entities such as postal operators could also serve in this capacity, particularly to support accessibility across demographics and the geography. And the other side of the intermediary is called merchant-facing intermediaries. And these intermediaries work directly with merchants to assist with onboarding and the technical support and possibly providing value-added services like accounting. And the entities in this category often include the payment system providers and the merchant acquirer or sub-acquirers and the independent sales operators. And then they play a key role in creating a supportive environment for merchants to accept CBDCs. In order to facilitate the CBDC adoption, the central banks need to get the buy-in from these intermediaries, and intermediaries will provide certain services. So central banks need to understand the dynamics of the existing market structure, specifically the business model and the incentive structures of these intermediaries. By aligning the intermediaries' incentives with the broader goal of the CBDC ecosystem, central banks can foster a more cooperative environment for CBDC adoption. That being said, some central banks may decide to offer specific services directly by themselves, like digital wallets or identity verification, depending on their policy goals and the structure of the country's market. This means that the division of labor between central banks and the intermediary could vary significantly from one jurisdiction to another. So that's a caveat, but let me stop there.
That's great. I think that it may sound very logical and very intuitive what you have presented, and this is something rather logical and intuitive, but I would say it's something that it's lacking in most of the literature, or at least recent literature about retail CBDC's adoption, because the retail CBDC has been or was taken at the beginning just like a solution by the central bank for the central bank. But I would say that the view that you have put into the document and in what you have answered has a lot to do with the problems and the low and slow adoption in several countries which have already rolled out the retail CBDC and have found out by force that the consumers and the merchants and the intermediaries were not ready to do it. Were not prepared. They didn't know how to use it or what was it about. So I think that's a very valuable contribution of your paper, and I think that your comments about your insights are really interesting to this discussion. Next, I would like you to introduce the framework for tackling adoption, which is called REDI. Could you please walk us through the framework and why is it important for getting the adoption? Tayo.
Yeah, sure. So in our paper, we have a framework, as Carlos said, it's called the REDI Framework. We wanted to make it catchy, getting ready for CBDC adoption. That's what we had in mind. And really, this framework is intended to serve as a guide for policymakers in thinking through how to prepare for CBDC adoption. And the framework is meant to be comprehensive, so we don't necessarily suggest that any of the strategies that we lay out are more important than the other. Rather, it's really up to the countries to test and see for themselves which would be most suitable given their country's context. So the framework has four, I guess, broad categories. The first one is R, regulation. So here we talk about how policymakers can potentially set some rules around intermediary participation. So they might want to mandate certain payment service providers to act as CBDC intermediaries to help build out the network in the initial stage. They might want to establish CBDC as legal tender to help mandate merchant acceptance, or they might want to govern the user fee structure. So this could be done by setting fees for basic services and allowing PSPs to maybe charge for value-added services. Or they could also establish maybe some minimum quality standards for services, such as the central bank providing its own white label wallet that intermediaries can then build on top of. For E under the framework stands for education. I think I mentioned this briefly in my previous answer, but really central banks need to be able to provide clear and easy to understand information on the benefits of CBDC, and they also need to try to counteract misinformation, because there's a lot of that. There's a lot of misunderstanding in the market about how CBDC is a crypto, is a stable coin, how the government will use CBDC to monitor citizens and try to get citizens to pay more taxes. They really need to counteract this misinformation that's going around. The way they can do this is they could disseminate information through official portals or social media. They could also leverage industry partners to help extend the reach of this education. The next part of our framework is the D, and this stands for design and deployment. So in terms of design, we think that this is straightforward. CBDC, it really should be easy to use universally. So a very simple UX, UI. And for merchants, this also means, ensuring that CBDC is able to be integrated with existing systems without requiring merchants to, upgrade their devices or their POS terminals. And this incurs costs for the merchants, right? From a deployment aspect, so we think that central banks should be working with intermediaries to offer both physical and eKYC for onboarding users, because users will have varying digital and financial literacy. And they can also work with local intermediaries, especially to provide cash in, cash out points for CBDC, especially in rural and remote areas. So this could be, post office or even supermarkets or mom and pop kiosks where users could cash in and cash out. And lastly, on the framework is the I part, which stands for incentives. So here we're encouraging central banks to think about both monetary and non-monetary incentives to encourage participation in the CBDC network. So for intermediaries, this could be in the form of providing subsidies for some setup costs, at least initial costs, or it could be even allowing intermediaries to monetize user data with their consent, obviously, or charging for value-added services. And from the user side, some incentives that central banks might want to be thinking about are maybe giving bonuses during onboarding, or bonuses based on how much CBDC the users spend. And this could look like cashback offers, discounts, loyalty points. And we've seen a lot of these things being implemented, especially in China. I think there were quite a few airdrops and lotteries for the ECNY. So yeah, so this is our framework, from a short summary of our framework.
That's great, Tayo. Thank you very much. Natsuki, what do you see as the most effective strategies from this framework for Japan's exploration of a retail CBDC?
Yeah, thanks. Thanks for the excellent questions. For Japan's unique landscape, I believe the most effective strategy from the REDI Framework centered on the well-considered design, especially for interoperability and the targeted incentives and complementary regulations. Let me briefly mention about these three. So Japan, despite the global reputation for technological innovation, has a traditionally cash dependence culture, similar in many ways to Germany, to my knowledge. And however, the push toward the cashless payments has gained momentum, particularly with the rise of the QR code-based e-money solutions after the COVID-19 pandemic. Now, there are many PSPs that have been building walled gardens, which has fragmented the payment markets and created complication in user experience. So in my view, any CBDC strategy in Japan should focus on the interoperability with the existing payment solutions. And incentive will be also important and very crucial. Despite of the rapid adoption of the cashless payment, which I just mentioned, there remains a significant reluctance from older citizens and the smaller merchants due to the perceived high initial costs of learning and implementing these new tools. So for those reluctant to adopt CBDC, incentives to lower the cost can ease adoption process. And likewise, intermediaries who might view CBDC as a competing product would benefit from incentives that align with their business model, such as lower cost access to payment infrastructure that support their existing services. Regulations can have a complementary role to ensure minimum service quality for consumers and affordable prices for merchants. Nevertheless, imposing regulations may be cheaper for fiscal perspective, but often comes at the political cost. Conversely, providing the incentives may require budgetary resources. So in Japan's cases, balancing these two incentives and regulation will be essential to secure adoption without straining the public resources or political capitals. Lastly, let me briefly mention about education. And I think education can be sequenced later until we figure out or hypothesize about the potential use cases and ensure CBDC's design matches the users and the intermediaries' expectations. It's much like the case with the iPhone. Before it existed, the people likely couldn't imagine wanting a phone without physical buttons, let alone one that could eventually support an entire ecosystem of applications. Only after seeing the product did the broader possibilities come into view, even for Apple employees. So likewise, Japan's CBDC strategy must consider how the design could unlock future possibilities, particularly in areas like value-added services, ease of use, and enhanced security before they get ready to roll out and make public education. Thanks.
Thank you, Natsuki. I think that's really interesting because I think it has been also absent from the discussion about how to compensate the intermediaries if this is going to be something that will be like requested or mandated to those intermediaries to be the ones who distribute in these two layered system of distribution of the retail CBDC, how to compensate them, what is in the game for them. So that's a very interesting topic because at the end, if they're going to distribute it, they should have the right incentives to do it. Otherwise, they won't. So that's something that we see in many other fields as also with fast payments. In some cases, the banks or the distributors or the intermediaries are really happy with the fees that they collect with credit and debit cards, and they're not really interested into fast payments. So I think that the regulation and the clear incentives, it's something very interesting. And it's something that I think that in your paper is a great contribution because it's very difficult to see someone talking about that part of the very long equation of how to get the retail CBDC adopted. So that's great. We've heard a lot about integrating CBDCs with existing financial systems. Natsuki, could you share your thoughts about how Japan is thinking about this issue, about the integration of CBDC with the existing financial systems?
Sure, thanks. So integrating CBDCs with existing financial systems is very important to ensure interoperability, which I stressed of the importance between CBDC and other digital payment instruments. And this is particularly relevant to Japanese payment landscape, where many PSPs are creating walled gardens, and where CBDC could function. And then, so because it's fragmented payment landscape, I think the CBDC could function as a bridge currency from one PSP to another. And such interoperability seems natural feature for CBDC as a legal tender. And the interoperability with a bank account is also important to realize so-called waterfall or reverse waterfall functionality, as it is expected to have some level of the holding limits on CBDC balance to mitigate the financial stability risk or in other words, bank disintermediation risks. Moreover, in my purely personal view, the CBDC could be considered as a platform to enable unseen fintech services to grow on, as CBDC is not only digital money, but also payment systems. And to achieve such an open ecosystem, it is crucial to remove any frictions, including costs. So as you know, it resonated what you said, Carlos, the providing incentives to remove all the frictions, including those for intermediaries, will be very crucial. But again, it doesn't come for free. I mean, there is of course a trade-off between the adoption and also the sustainability of this payment system. I mean, who would provide such a budgetary incentive to the users, consumers, merchants, and the intermediary? If it comes from the public sectors, obviously there is some limit to that.
Thank you, Natsuki. Tayo, what insights can you provide regarding the integration of retail CBDCs into cross-border payments or financial innovation?
Yeah, so I think so far throughout this conversation, we've been talking mostly about retail CBDCs, right? But I guess in the past year, or even in recent months here at the IMF, we've seen this sort of gradual shift in interest from retail CBDC to wholesale CBDC. And specifically, we've started hearing a lot more conversations on how wholesale CBDC could be used to support cross-border payments or other innovative use cases, such as supporting tokenization of assets. And yeah, so on the cross-border payments front, we've obviously seen projects like mBridge move from the pilot stage into the MVP stage, as they're calling it, and they're welcoming new joiners. And so more central banks are now joining that project. And I think they're very much focused on using wholesale CBDC to promote international trade among the countries that have joined the project, and specifically, settling these trades in local currencies. So that's really the goal of their project. And we've also seen some, here at the IMF, we've also seen some more regional efforts pop up. So for example, there are some countries in Africa that are part of a monetary union, and they're looking into how they could potentially use CBDC to improve cross-border payments amongst themselves, especially because a lot of these countries face very high costs when it comes to cross-border payments, especially for remittances, where in Africa, we've seen that some corridors for sending remittances, the costs can go as high as 20%, which is quite insane. We've also seen a lot of interest in using wholesale CBDC with regards to tokenization, as I mentioned earlier. So I think everyone joining this call that's familiar with this space, they've obviously probably heard of Project Agora. This is a project that's I think we should all keep an eye on, because it's a project that is looking into how they could use wholesale central bank money, so wholesale CBDC, to settle tokenized commercial bank deposits on a shared common platform. And I think already more than 40 companies have signed up for this project. So definitely something to keep an eye on and see how it progresses. And then out of Asia, where I'm from, I think Hong Kong, they've also launched their own project, which is called Ensemble. And I think that's a sandbox where the Hong Kong Monetary Authority is launching to test tokenization use cases, such as using wholesale CBDC once again to settle tokenized real world assets. So I think regarding your question, there's been this shift in interest from CBDC, from retail CBDC to wholesale. And I think, this opens up a lot of opportunities and a lot of conversations to be had around more innovative use cases. And it's just interesting to see how things will progress as it moves forward.
Thank you, Tayo. And that was in fact, for everyone to know, that's a very nice conversation we had with Tayo last week on DC while we were enjoying coffee near the IMF. And it's that the dynamics of the different flavors of CBDC tend to change. I mean, there's like a flavor of the year or the month, in which right now we're in the wholesale CBDC flavor. That there are many projects and many pilots and many central banks trying to get the wholesale CBDC pushed forward. A couple of years ago, it was more like a retail CBDC thing. And right now, what we have been, or what we discussed with Tayo at that time, is that there are just a handful of retail CBDC projects that are clearly going forward. But we should be attentive that the cross-border retail cross-border CBDCs and the retail CBDC could come with higher, with a new impetus in the next year, in the years to come, especially if the digital euro comes to become a reality. Perhaps that will push some other central banks to think about it, even from advanced economies. I skipped a question for Tayo, and it was just my mistake. So Tayo, I'm going to go back a little bit about, to discuss adoption, because I missed that question. I'm sorry about that. But the thing is, from what you have learned in this research, what are the strategies that could facilitate adoption? Do you foresee any trade-offs or risks associated with those adoption strategies?
Yeah. So for sure, I think there are definitely trade-offs and risks when we talk about adoption and how to facilitate adoption. And in our paper, we try to touch on some of these topics. So I guess one way to think about this is that, with CBDC, central banks often try to use CBDC to promote a specific policy objective. But how they design it, if they design it to provide incentives to certain actors to promote adoption among those actors, those measures could turn out to be off-putting to other actors. So I guess one clear example of that is, if you want to design CBDC to be an attractive payment instrument to users, it would probably need to have some sort of privacy embedded into its design, because users like myself, we're very protective of our data and our privacy, especially when it comes to financial transactions. But the more privacy you enable to users, the more difficult it will be for regulators to be able to use the CBDC data to do their regulatory monitoring, to do AML CFT prevention, to prevent illicit activities. And so striking that balance between I guess design and attractiveness is a key consideration for adoption. And I think a similar topic related to that is the issue of incentives that could be provided to intermediaries. So one of the incentives that we talk about in our paper is potentially allowing intermediaries to monetize CBDC data. But at the same time, this could raise a few concerns regarding users' privacy. Users might feel uneasy about how their transaction data is going to be used, and they might not want to use CBDC at all, because they're just skeptical or hesitant about this. And so that another trade-off is really to balance incentives as well. And maybe one last thing that has been talked about a lot, but I don't think the conversation has moved forward as much is really how to drive adoption with the overarching goal of financial stability. And this is because, if CBDC becomes widely adopted, this could introduce risks such as bank disintermediation, bank runs, CBDC, since it's central bank money, it could encourage people to move their deposits from commercial banks to CBDC, even in normal times, and in times of financial uncertainty, they could make these moves even faster, and this might destabilize the banking sector. So there's been a lot of research done in this space by a lot of economists, a lot of IMF economists really, and a lot of academics as well. But I think given that, we still haven't seen levels of adoption, they're still quite low. So we actually don't really know how all of this will play out if adoption becomes more widespread in the future. But one of the things we're mindful of in our paper is, we're not trying to say that central banks should be trying to maximize adoption, or that they should be making adoption as widespread as possible, precisely because there are risks associated with it that we don't really know how the risk will play out. So there has to be some sort of optimum level of adoption at the end of the day, but depending on the country, depending on their economic fundamentals, it will vary from country to country.
Thank you for that, Tayo. I think that you enter a rabbit hole, the rabbit hole of what is like the optimal level of adoption, because at the end, as you rightly mentioned, too much adoption may end up being a threat to the business as usual of commercial banks and obviously to financial stability because of, and just one of the topics that is mentioned in the financial industry, which is the deposit migration. That could be something that could happen, and that's something very interesting to discuss. And I think that would give us like enough topic and questions for an entire CBDC broadcast. I mean, like what is the optimal level, and what are the consequences of getting to that level, or something higher or something lower? So that's a very interesting point. We're about 9 minutes before we end the broadcast, so I'm going to send the last question to you guys, which is the one that we normally, the type of question we normally have for my last question, which is, what is your view about what is going to happen in the years to come, especially in G7 countries, about retail CBDCs? Do you see retail CBDCs being designed, piloted, and implemented in the next, let's say, 5-10 years? What do you think about the adoption? Very quickly, so we have at least 5 minutes to the Q&As, because it's very long now.
So yeah, let me go first, very briefly. So, as you rightly said, the ECB and the UK among within the G7 countries are making a lot of effort to explore CBDC, with a milestone in late next year. While we explore our own CBDC, Japan, as well as other major countries, will closely monitor and collaborate with the authorities. So it's hard to expect what the outcome of this exploration. But in the long run, I'm optimistic on the future of the retail CBDC, as history of the money is a series of innovation, starting from the barter, metal, and paper. And the more it evolves, the intrinsic value has faded and the trust comes in. So if we go from the physical to digital world, that would require more trustworthy payment instrument, which, in my view, will be issued by the central bank.
Thank you, Natsuki. Tayo.
Sure. Yeah, so my personal view is that I think interest in CBDC overall is still strong, but many countries are now sort of slowing down their exploration a little bit and taking more of a wait and see approach. just because they want to see if, the CBDC launches or the pilots in other countries will take off. But I think just because the adoption, just because it's been like pretty slow and limited, it doesn't necessarily mean that interest in CBDC is low, or that, CBDC should be seen as a failure. I think, as with any new technology or product, adoption will take some time to ramp up, and it won't be a linear or straightforward process, and it will take a lot of iterations to get it right. So like in the ECCU, we saw that their central bank wrapped up its pilot, and they're now preparing for a second round of piloting, which they're calling the new and improved Dcash 2.0. And in Nigeria, we're also seeing the same thing. We've seen the central bank taking a few steps back to reiterate certain approaches for their e-Naira. So yeah, it's going to take a lot of iterations to get it right. But at the same time, we've also seen some advanced countries such as Canada and Australia, they're halting their CBDC efforts, their retail CBDC efforts altogether. And this is because, they've explored it for many years, and they're concluding that there aren't any immediate benefits for retail CBDC for their specific countries. And that's an okay conclusion for advanced economies to make as well. So it really depends on, like I said, CBDC is really country specific, and the way it'll evolve in the future will depend on each country. So, but regardless of, how this plays out, I don't think central bank digital money is going away anytime soon. I think it's a natural progression that central banks should be thinking about as they move towards a more digitalized world. And so we'll just have to stay tuned and see how things keep developing.
Thank you for that, Tayo. I can't agree with you more, because I think that the society, and at the end, the retail payment ecosystem is a reflection of society. It's a complex system. So adoption is something which you mentioned. It's not linear. It's difficult. It won't be happening anytime soon. It's not like that. And most likely, as many other complex systems, it is about tipping points. I mean, it will come the time at which something will click in the merchants, and simultaneously in these merchants, intermediaries, and the consumers, and it will start adopted in a most likely non-linear way. So that was very interesting. So thank you both for joining the Retail CBDC broadcast. So that's the end of my questions, but now we have the question from the public, and I counted something like 20-something questions, and we only have like 4 minutes, and I'm going to cherry pick several that I found very interesting. There was one about what were your take about the low and slow adoption in Nigeria, Jamaica, and so on and so forth. But Tayo, you already covered that a couple of seconds ago, so I'm going to skip that one. One that is very interesting, and you work at Ministry of Finance and the IMF before, Natsuki, and Tayo, you work at the IMF. So that this one sounds like your type of thing. What potential implications do you foresee retail CBDCs having on traditional monetary policy tools? How should central banks prepare for those challenges? I know that one is hard.
Natsuki, do you want to take a stab at this?
Tayo, lady first.
Yeah, I think this is a difficult question, but it's a question that's commonly asked, and maybe the best way to answer this question is actually to promote other IMF fintech notes that have come out on this topic. So we do have a lot of papers on this topic, specifically on implications of CBDC for financial stability, implications for monetary policy transmission, implications for monetary operations. So there's a wide range of papers. I wasn't an author on any of those, so I don't want to dive into the details here, but I'm sure that Anna could help share the links later on.
That was a great workaround, Tayo. Thank you. So let's go to another one. Should certain merchants be mandated to accept retail CBDCs, like supermarkets, gas stations? I mean, do you think that there is some policy decision that should be taken about that? Well, no. Moreover, if there, First of all, now that I think about it, if it's going to become a legal tender, there is no reason to mandate because everyone should be able to receive it. What do you think about making retail CBDC a legal tender? Perhaps it's a more general question.
So perhaps let me go first. So actually, it's an interesting question because the definition of the legal tender varies from country to countries. So for example, in Japan, of course, cash is a legal tender, but it's possible for the merchant to make an announcement that no, we don't take cash, right? These are payments only, because that in our legal system, it's okay for two payer and payee to agree on to use the alternative payments rather than the currency. So there is a way to circumvent the legal tenderness in some jurisdictions.
Yeah, and maybe if I could add to that. So I think if you maybe stepping aside from the legal tender conversation, just mandating merchants in general. I think there are different ways to go about this, because you could mandate all merchants, but then that would impose a lot of costs to smaller merchants who all of a sudden they have to accept this payment instrument that they don't really understand, and there might be some costs around getting that set up. But at the same time, you could also think about just mandating large merchants such as supermarkets who might have the capacity, they might have the resource to be able to do so quicker. So there are many ways to do this. And I think that's probably a conversation for another day. But yeah, just my 2 cents.
That's great. I'll have the last one, and this should be a very quick answer. Do you think that incentives for retail CBDC risk fragmenting the payment landscape because we're encouraging one payment instrument over the others?
In my view, no, because if CBDC is just one payment instrument among the others, there may be. But if CBDC becomes more like a bridge or a platform, perhaps it just collaborate or coexist or enhance other payments, the usefulness of the other payment instrument.
So my answer to that is I think it really depends on what you want the CBDC to be used for. Like, what is the policy objective for it? So if you're introducing CBDC in a country where financial inclusion is very low and you want to use CBDC as a means to sort of promote financial inclusion, then yes, you may need to have incentives for using CBDC. And yes, you may need to encourage it more if you want to achieve that financial inclusion goal. But if you're already, if you're already a country with a payment landscape that is very diversified, and CBDC is just meant to be an alternative payment instrument on alongside those other types of instruments, then you really don't need to provide certain incentives to sort of build uptake there. So it really depends on what you want to use it for.
Okay, thank you, Tayo. Natsuki, has been a very interesting conversation, very enjoyable and very clear. So thank you for this. This is the end of the CBDC broadcast number 28, mitigating. Sorry, the title there it's wrong, but we know what we were talking about. It's retail CBDC adoption, consumers, merchants, and intermediaries. Sorry for that. Just for you, let you know to know, in November we're going to have 3 different broadcasts. The payment system broadcast number 17, finding a needle in a haystack. That's going to be a very interesting one. The next one is going to be the payment system broadcast number 18, about open banking from a regulatory perspective. And finally, we're going to have the consumer fraud and scams number, the 3rd broadcast, leveraging regulation and collaboration to combat consumer fraud and financial scams. And that's also something that we should be discussing anytime soon, about how fraud and scams could enter the retail CBDC realm, because nothing is outside the scope of these bad practices. So once again, Tayo and Natsuki, thank you very much for joining. See you sometime soon. Thank you, everyone, for attending.
Thank you.
Carlos. Thank you, everyone.
Bye-bye.
Bye.